Okay, guys. Yeah, good evening to all. In previous video, we have discussed basic business combination question, right? And also query books also we have discussed, right? So in this video, I'm going to discuss a question regarding common control transaction. What is that? Common control transaction. What do you mean by common control transaction, guys? Before and after acquisition, control lies with the same party. The control lies with the same party before and after acquisition, then it is called common control transaction. Correct or not? Yes, it's a basic thing only. Okay, see, MCQ purpose, please remember this. It is a corporate restructuring. It is not a business acquisition. It is not business acquisition. It is a corporate restructuring only. Yes, see, for accounting purpose, for accounting of common control transaction, pooling of interest method should be applied. What is the method, guys? MCQ purpose, please remember, pooling of interest method should be applied. Okay, so these are the steps you need to follow when we are solving a question as per, what is the topic? Common control transaction. Yes. So coming to step number 1, identify the acquirer company. Yes, we can easily find out that. Next, acquisition date. Second, what is it? Acquisition date. Third one, determine the purchase consideration. Same steps, guys. Step number 4, that is quite different. The basic, what is the step number 4 basically? Okay, what is that? NCA, yes, it is covered in step number 5. Basically, in this case, NCA is not applicable. What is the step number 5 here? Calculation of net assets, fair value of net assets on acquisition date, correct or not? Basically, so but in case of a common control transaction, so all assets and liabilities of acquiring company are taken over at book values only. That is the special point as per this pooling interest method. Generally we are following acquisition method, but this is pooling interest method, so that's why, so all assets and liabilities of acquiring company taken at the book value only, including reserves, guys. Including reserves also you need to consider in this common control transaction. Please consider this. This is a special point, guys. This is the special point. In case of a common control transaction, you need to consider equity also, other equity, nothing but reserves also. Okay, understood or not? Yes, basically total assets means outside liabilities, right? So when we are reducing the outside liabilities, you need to reduce this reserves also. That's it. That's the point you need to remember. In case of a common control transaction, that's a special point. And for calculating goodwill or gain and bargain purchase, same calculation. Purchase consideration minus net assets. Purchase consideration minus net assets. Net assets including reserves also. At which value? Book value only. At which value? Book value only. Same points, guys. So if it is positive, nothing but what is that? Goodwill. Negative, gain on bargain purchase. That's it. Same, everything is same, guys. Everything is same. Just only special point is when we are calculating net assets. When we are calculating net assets, you need to consider all assets and liabilities at book values only, not fair values. Even if the fair value is given in the question, please don't consider that. You need to take only book values. Okay. Along with that, you need to consider this reserves also. Okay, that's it. At book value only. Okay, so when you're calculating goodwill or gain or bargain purchase, yes, you need to include, you need to consider this what is that? Other equity, nothing but reserves also. That's it. Clear? PC minus net assets including reserves. Next, yes, everything is same, guys. Journal entry, basic journal entry, assets account debit, 2 liabilities, 2 reserves. Basically in normal journal entry there is no reserves, right? In normal business combination question there is no reserves here, but in case of a common control transaction you need to consider this reserves also, because you are acquiring that and that also, right? So that's why. 2 purchase consideration, so the difference should be loss on restructuring or gain on restructuring. Okay, simple or not? Yes, it may be loss or gain, whatever. Understood or not? For acquiring net assets we are paying the purchase consideration, guys. That's it. The difference should be gain or loss. That's it. Just use your common sense, not that much overthink is required. Okay, next, preparation of consolidated balance sheet of acquirer on acquisition date. Simple, guys. Take all assets, liabilities, share capital, reserves at carrying amount of acquirer company and give effect of above general entry. So you have written this journal entry, right? So please give effect for this journal entry and take all the book values of acquirer company. Don't change anything. That's it. Okay, don't do overaction also, not required also. Okay, just please consider all the acquirer values, book values only, and consider this entry. That's it. Okay, balance sheet similar to that only, previous one. Okay, yes, so please remember, guys, this is very important. Next, in case of accounting for merger, so basically Merger means two or more companies join together to form a new company. Correct or not? Yes. A limited plus B limited join to form a new company. AB limited. Yes. Okay. So in that case, see, if it is in the nature of common control, suppose example Mr. X is the owner. Okay. For A limited. Next B limited owner also X only. A limited owner is X. B limited owner also X. So now AB limited is joining together to form a new company, AB limited. So who is the owner here also? X is the owner. So this is also we can say common control transaction. Merger in the nature of common control. Correct or not? Yes, same as common control transaction. Accounting is same as common control transaction. Please don't get confused. If PC is not given, like a questions asking about requisite number of shares, then PC is calculated as. Basically, in few cases, so the PC purchase consideration calculation is not given in the question. So number of shares is not given. So they will use this word like requisite number of shares to be issued by that acquirer company. They will say like this in the question. In that case, you need to calculate the purchase consideration based on net assets, including reserves of both the companies. Distribute this PC to both companies under net assets ratio. What is it, guys? What is the PC here? Net assets including reserves of both the companies. Okay, distribute the PC to both the companies in net assets ratio. What is the meaning of it? Suppose example, I have A limited to B limited, two companies are there. So for two companies, you need to calculate this all these net assets. That's it. Distribute that PC to both the companies in net assets ratio. Which ratio? Net assets ratio. So please remember this. So this is very important. We are going to discuss one question on this. Then you will get a clarity. So next question I am going to discuss based on this point only. Okay, understood? Yes. Okay, so I don't want to discuss all this. In next video I'll discuss the reverse acquisition. So as of now I'm going to discuss, what is that, question number 4. See guys, AX limited and BX limited amalgamated from 1st January. A new company ABX limited of 10 rupees each shares was formed to take over the new business of existing companies. Summarized balance sheet is given. PP, financial assets, investment, current assets, inventory, trade receivables, cash and cash equivalents, equity, share capital, other equity, borrowings, current liabilities, financials, trade payables, everything is given. Okay, so coming to point, ABX limited issued a requisite number of shares to discharge the claim of the equity shareholders of the transferor companies. Who is the transferor company, guys? Transferor company. Can we say acquirer company equal to transferor company? Say yes or no. Transferor company is nothing but acquirer company? No sir. Transferor company means transferring their assets and liabilities. Who will transfer? Selling company will transfer. Nothing but acquirer will transfer. So please don't get confused, guys. Please don't get confused. Okay. So the point. So here transferor companies means acquirees. Nothing but AX limited and BX limited. Okay. Also, the new debentures were issued in exchange for the old series of both the companies. Prepare a note showing purchase consideration and discharge thereof. Draft the balance sheet, assuming that both the entities are under common control. So now I am going to discuss about the question regarding the concept common control transactions. So I think every common control transaction related concept, everything should be in your mind. Then only you can solve this. Easily you can solve this. Yes, this is merger in the nature of common control. Say yes or no. Merger in the nature of common control. Say yes or no. Yes. Yes or no, guys? Yes. And one more point, requisite number of shares they have using. So in this case you need to calculate. I already discussed, right? So please do like that only. Yes. Okay. Shall we start? So almost 9 minutes for question only. Sorry guys. Yeah. See. Okay. AX limited, BX limited formed new company ABX limited. Okay, ABX limited issued fair value, nothing but 10 rupees value, requisite number of shares. They are using requisite number of shares. They are not saying exact number of shares. You need to calculate the number of shares. Okay, you need to calculate the number of shares. Yes. Okay, very good. See, coming to step number 1, who is the acquirer basically? ABX Limited is the acquirer. Yes, step number 2, because the question is clearly saying that it's a common control. It's a common control. Yes, ABX Limited is acquirer. Acquisition date is also given in the question. Step number 3, calculation of PC. Calculation of PC. Correct or not? Yes. See how to calculate the PC calculation. Nothing but how to calculate the PC, guys. So see, PC equal to, I'm already discussed in theory. What is that? Net assets including reserves of both the companies. Net assets including reserves of both the companies. Net assets means total assets minus outside liabilities minus reserves. Including reserves means what is that? Including reserves means you need to reduce the reserves also. That's it, guys. Okay, so these are the total assets, guys. What are the total assets in the given question? To go to question, if you want, you can go to question. What is the total assets? 13,050, 15,200. Correct? Yes. 13,050, 15,200. Next, reduce the borrowings. Next, outside liabilities means what are the outside liabilities here? Borrowings. Next, trade payables. Correct or not? Yes, only trade payables. Only 2 outside liabilities, including reserves. Nothing but other equity. Yes, you need to reduce that also. So borrowings, trade payables, reserves. So then you will get the net assets. Then you will get the net assets value. This is the purchase consideration. Total purchase consideration, how much, guys? 6,000 plus 7,000, total 13,000. That is the total purchase consideration. Correct or not? Yes, ABX Limited need to pay 6,000 to AX Limited, 7,000 to BX Limited. Correct. Note 1. In the options of exchange ratio, PC should be calculated on net assets method. So if the question is nothing is saying about anything, sorry, if the question is saying nothing about the purchase consideration, yes, please calculate the purchase consideration based on net assets method. Yes, you have calculated based on net assets method only. Total assets minus outside liabilities including reserves. That's it. So in case of a discharge of a PC, for total PC would be allocated to shareholders of a selling company in the ratio of net assets excluding reserves. What is the point? They're clearly saying that. So the concept clearly here. Distribute this PC, whatever the PC you have calculated, that should be distributed to both the companies under net assets ratio excluding reserves. So please remember this point, guys. Please remember excluding reserves. Okay, so what is the total PC here? Total PC 13,000, we already know about it. Yes. Okay, so for AX Limited, what's the calculation, guys? So excluding reserves, please remember this point. Why excluding reserves? You will get one doubt, right? Sir, why excluding reserves? Can you please try to tell me? Sir, for calculating purpose, for nothing but for calculating purchase consideration, we have considered the PC including reserves only, based on net assets only. Correct? Yes or no? Yes, but when we are discharging, so we need to allocate to shareholders of selling company in the ratio of net assets excluding reserves. Why? Because, sir, that reserves is already okay. So basically, reserves are internal only, not external, right? So because the ultimate control lies with the same party. Only. So that's why those reserves are internal only. So why we need to discharge that? So that's why excluding reserves. Excluding reserves only, we need to, what is that? Guys? We need to allocate based on excluding reserves only. That's why. So excluding reserves, what is the total net assets, guys? So excluding reserves means, so before reserves. So then you will get add this 3,050 to 6,000, total 9,050. Here 9,700. In that ratio only you need to allocate. So that's why 9050 is to 9,700. Okay, now understood or not? Yes, 13,000 into 9,050 divided by 9,050 plus 9,700. Here 13,000 into 9,700 divided by 9,050 plus 9,700. Total 6,725. 6,275, 6,725. That is the discharge of purchase consideration to both the companies. Excluding reserves only we are paying. This is the internal reserves, guys. That's why. Okay, simple concept. Okay, so I think you are done with the calculation of purchase consideration. Correct or not? Yes or no? Simple or not? Yes. I think we have a solution here only. Okay, so we have calculated the PC. Then next to us, what is the step number 4? We already know about it. Net assets calculation. Next, calculation of goodwill or gain on bargain purchase. Yes, can you please? Calculation of goodwill or gain on bargain purchase. What's the purchase consideration, guys? What is the purchase consideration? Total 13,000. Correct? Yes, 13,000 minus net assets. Net assets including reserves, excluding reserves. Amma. Please. Concept. What's the concept here? Step number 6. Including reserves. How much? Net assets including reserves. How much, guys? Net assets including reserves. How much? 6,000, 7,000. Total 13,000 only. 13,000 minus 13,000. 0. There is no goodwill. There is no gain on bargain purchase. No need to calculate. If you want, you can show in the as a working note. Okay, otherwise not required. So basically, in this question, it is 0 only. Clear or not? Yes, obviously. So simply you can prepare the balance sheet. Simply you can prepare the balance sheet, guys. So go to balance sheet. With the balance sheet. Yes, here is the balance sheet. See, I don't want to discuss all the things here. Just simple take the acquirer book values as well as acquiry book values. Simply total book values. Everything book value, guys. Everything book values only. Yes. Please total all the book values and then you can take here. Okay. In case of equity, only in case of equity only. So see, what is the equity share capital? Can you please tell me? What is the equity share capital? Anyone? Please, guys, anyone? How many shares we are issuing? Nothing but. What is the PC here? Total PC 13,000 means 1,300 shares only. 10 rupees a face value, right? So nothing but total 13,000 only, right? So equity share capital 13,000. We are issuing share capital. We want only issuing share capital. Don't take these two values, guys. Please, because these are both are acquiries only. Correct or not? These both are AX limited and BX limited only acquiries only. So ABX is only the acquirer. So that's why what is issued share capital you need to consider, that is 13,000 plus other equity. What is the other equity in the given case? See, guys, we have a working note also. What is the other equity in the given question? Any other reserves we have? There is no other reserves. Just you can total the reserves whatever given in the question. There is that. Yeah. So how much reserves we have here? Total how much, guys? Please tell me. 3,050 plus 2,700. Correct? 3,050 plus 2,700. Correct? Yes or no? Total how much? Please take the calculator. How much, guys? 3,050 here given. 3,050 plus 1, how much? 5,750. Correct? 5,750. Yes. Just copy paste. Other equity. So everything book values only. Nothing to change. Only this equity only. This is important here. Only equity share capital is only important in case of a common control transaction, guys. Okay. Merger in case of a common control. So please remember this point. That's it. Everything book values only have taken. Simply you can tally the balance sheet. In case of a common control transaction, easily you can tally the balance sheet. So please remember the things what I have discussed till now. Okay, this is question number 2. Question number 2 important, guys. And one more thing I want to discuss the reverse acquisition point. So that is B point. Because you don't know what is the reverse acquisition, so that I will discuss in next video. Okay, thank you so much.